Hello, everybody, and welcome back to the currently unnamed podcast. I'm here with my friend Bryan.
Everyone, thanks for the great introduction, Josh. Pleasure to be on the new minted podcast. Let's
I
go.
know we're minting podcasts faster than the Treasury's minting $100 bills, bro.
That is pretty
Brr.
quick. Money printer goes burr. I work in tech sales at a Cisco reseller, also a real estate agent. And so trying to build up some real estate properties and income properties to get that passive income going. But yeah, me and Josh have known each other for a while, and since high school. So just always had this idea of throwing together a podcast, and some of our conversations, get pretty crazy. We'll be talking about whatever, Elon Musk, space travel, you know,
The future of tech.
tech companies, finance, all of the above.
So the reason I thought you would be a good co-host is I think you offer a different perspective than me, right? Like I am focused more on stocks. I run my own investing and personal finance channel called Josh Invests on YouTube. I've been doing that for the past almost year, coming up on the 1 year anniversary. Um, so I thought, a diversity of opinion would be really good. And you focus more on real estate, of course, although I'm sure you do have exposure to equities.
A little bit, not too much, but I have a few stocks. I started an IRA, so I'm just gonna start buying ETFs in my IRA and just holding that long.
Nice. So is that a Roth?
It's a Roth IRA, yeah,
Dope.
through
Yeah, that's
Charles
been
Schwab.
my
Just opened it up.
yeah, that's been my alternative to just saving in a savings account. Because rather than getting like 1%, I can invest in a broad index. The risk is much lower. There's still risk, but if it really hit the fan and I lost my job or something, and I have a small emergency fund, but if anything were to happen and I really needed the money, I could always take out the principal, whatever I've put in, and just not touch the capital gains, and I
In,
won't be
in, in say
taxed.
what kind of fund though? In an IRA or just your brokerage account? Because you
Um,
can't take out your IRA funds. Those are, I mean, you could, but you're going to pay taxes on them, right?
you would pay a penalty. Yeah. So yeah, it's definitely not recommended. uh, yeah, you should talk to a CPA, obviously. But in my experience, I have taken out from a IRA before, and you pay a 10% penalty on whatever the principal is, and then whatever your market appreciation is, you would have to pay capital gains on top of a 10% penalty. So I guess what I'm saying is like, okay, you have $1,000, you could earn 1% and not risk any gains and any taxes, or you
Mm-hmm.
could put it into a Roth IRA, and if you ever have to touch it, you risk paying the 10% penalty, but you know theoretically you could gain a lot more than that.
Yeah.
um,
So I ran into that problem this year. Um, I think the exception there is if you're putting the money towards your primary residence, you're allowed to take out the money unscathed or without penalty. I believe. So, definitely look into that more. But I'm pretty sure, you're allowed to take out of your IRA if you do go into your um, first home purchase or primary home purchase, which I was all in stocks, right? I didn't have an emergency fund. I was super safe up front, just in a savings account. And then I decided to get more aggressive to increase my yield. And so I went heavy into bonds. And when I needed to purchase my house, this is just in a brokerage account, not in my IRA, because I just opened that recently. But I took a hit on the um, bonds because they were down when I sold them. So now I'm just holding up heavy emergency funds in case I have to liquidate or purchase anything. I just have cash ready, which may or may not be optimal. I know in the next year I might spend up to that amount, so I'm fine not having it invested. Um, and then beats having to sell out if anything happens there.
Yeah. Yeah, I think it's also important to point out your financial position is and your needs are different than mine, right? Like that's the danger with listening to strangers on the internet. Like your situation could be completely different than somebody else's. So I guess my point is like, you've bought your house. Let's say you need a new roof or, heaven forbid something happens. You need
Exactly.
access to the capital. Whereas with me, the worst thing that could happen is like the engine in my car gives out. That's a lot less expensive than replacing a roof, right?
Right,
So
right.
so my liquid capital needs are much lower than yours.
Exactly. I mean, it's almost in my head, dedicated for home repairs. If my AC goes out, the roof goes out, I have 10 grand saved where I can put towards that. Also, if I have to get a new car, I have some money there that we can put away um, towards that. So, but yeah, then diversifying, adding more towards the portfolio. But really, we just bought this house, and got a roommate today. Actually, she just moved in. So I have, between my girlfriend and another roommate, two roommates paying towards the mortgage, which is helping. It's essentially house hacking. Um,
Yeah, that's awesome.
to afford this. Yeah, um,
I'm so
it is.
jealous.
Yeah, it is. It's a pretty good move to get into something a little bit bigger than I otherwise would, and improve it a little bit. Increase the equity, and then I can rent it out in a couple of years down the road.
It's beautiful too. I mean, I can just from what I can see, like we haven't seen each other since all this craziness began.
I
Um,
think we hung out right before the whole
yeah,
shutdown situation.
but that was
No, I say
before
that.
you bought your house.
Yes, yes. So I
So,
bought my house mid craziness, right?
so
Yeah.
I
So
mean,
you haven't seen it yet, but it's 3 bed, 2 bath, 1,700 square foot house. So it's pretty central, North Tempe. Technically a Tempe address, but it's on the border of Scottsdale and Tempe. So it's
oh, okay.
kind of a cool area where it's super up and coming. And then rentability. My roommate goes to ASU, so perfect for attracting roommates or tenants there.
So it's a 3 bed, and so do you have one vacant bedroom then?
Yeah, we have one open room was kind of an office, but now we just redid the floors. It was like old carpet that was kind of gross, so we put in some laminate flooring this past weekend and painted the room, and probably put my desk back in there, and it will be an office again. It is rentable, but we came to negotiations with my roommate that she didn't want too many to live with too many people, and wanted an exclusive bathroom, which makes sense. So
Okay.
we agreed, that it would work out, just having three of us in the house. It was affordable. So we said, okay,
Cool.
for the first year, we'll just have that set up.
So are you planning to use the extra room as like an office or
Office, yeah. My girlfriend does yoga in there. There's kind of her workout room. But yeah, mostly just extra room.
Cool. So, do you want to go into specifics on the deal? Do you want to talk about that or?
I mean, I don't think it's I think I paid fair market price for it. Um, Nothing too crazy. As I was kind of alluding to earlier, the inventory on the real estate market is super low right now. As the interest rates are dropping, people can afford more house, and especially with a lot of uncertainty, real estate is a safe place to put your money. Um, Take that with a grain of salt. People say generally the real estate market goes up, but as a realtor, we're going to make you sign a form saying that the real estate market is cyclical. It goes up and down, and no one can
Right.
predict it. So, but right now, I pretty much just want to get into a property. I've been looking for so long, for a year. I had, two other properties under contract, and they just had so many repairs and so many oddities of buying a house that was built in the 60s. And so when we found this one, we're kind of surprised. Is remodeled in 2016. So it's fairly nice for the age of the house. And we knew we were going to make it work out. We're going to fund it either way by house hacking. So we closed on it for $332,000. Since I'm a realtor, I got to pay myself commission on that. So 3% on 332,000 minus my broker fees. I made an extra $8,000 on that, which went straight to equity. So if you subtract that from the sales price, is essentially where I see how me getting into it.
Oh, I see. So that's actually something I never really put the pieces together on. So you're saying that you bought the place and you financed, whatever percentage, but
5%
your
down.
commission was on the full sale. So you got paid based on the full closing price. So, it's almost like you
3%
printed
seller's
money.
commission. Yeah, I mean, kind of.
Yeah, kind
Essentially,
of, kind
it's
of.
not. It's not the money doesn't. It's not in my income. It just got built into the equity of the house and the structure of the deal. They
Oh,
were going to
okay.
pay 3% regardless. Anyone brings them a buyer, they're willing to pay 3%. They're going to pay their agent and they're going to pay me. And so I think the last owner bought this house for a very attractive price of $250,000. And so, uh, they made good profit on this, but they did upgrade all the windows. Um, and they did a few things here and there where you could tell, okay, they put care into the house. So,
Yeah.
and I mean, just market prices have gone up so much. For the area, it was reasonable. Um, but yeah, $8,000 extra into the deal. I think I had to put 11,000 down with to buy stuff for the house. But yeah, I got into this place for 11,000, and now I pay whatever 700 a month out of pocket for my portion.
Okay. Yeah. Okay. So 11 grand down. That's what? 3%? No.
So 11,000 plus about 8,000 is about 19,000 down.
Okay.
There's some closing cost factored in there. I think 16,000 is 5%. Like 16,600 is 5% on 332,000.
Okay. But for the average person, if they have a real estate agent representing them, they're not going to be they're going to have to the sales commission isn't going to get rolled in to the equity.
Right. Yeah.
Yeah.
Since I represented myself as a realtor, I got to keep my commission and, buy the house. Um, a normal person going in to buy a property, you can work with your realtor to negotiate. You can have the seller pay your closing costs. You can have them pay money for repairs. You could just work them down. If it wasn't such steep competition. I'm sure, the first house I sold, we negotiated, I want to say they were like, at least we negotiated at least 10 grand off for our buyer that we sold. They owned it for 1 year and were getting divorced, so just need to get out of there. And so we took slight advantage of that and just countered super low, and they had to accept. So there's different tricks of the trade you can do. But yeah, I mean, 5%, I was willing to come in 5% at 330,000. I had that money in cash. And so it was just really a bonus.
So do you have any like tips for people who, maybe they want to save a significant portion of their income and they want to do house hacking? Do you have any
Mhm.
tips for them?
Start saving that down payment. That's going to be important. And then just start looking, because I have a couple friends that want to buy right now. And it's like, you might not find the house tomorrow, but get your pre-qualification, have your down payment, save more. If you could put 20% down, you're in an even better position than someone that would put 5% down, because you avoid private mortgage insurance. So I'd say just keep saving and keep your eyes out, find specifically where you want to be, and just watch the market, watch things as they pop up, or find a realtor and have them watch it for you. That's their job. That's how they get paid. So they'll send you listings. Um,
Right.
yeah, I mean, as far as house hacking, you can look around, look at comps in the area, see what other houses are renting out for, and make sure your mortgage expenses will be less than uh, what a house in the neighborhood rents for. You want to shoot for a couple $100 profit per month between your mortgage and what you're renting out for would be ideal. Um,
So like I know you're paying a share, but let's say you weren't and there were a family or three different people living there.
yeah, so we've had this conversation too. Do we take each room and individually lease it out to college students, or do we just rent it out as one house to a family? I think it'd be more profitable to take each room and individually rent them out if we could. Um, but another house in the neighborhood went for like is renting for $1,900. We pay, I think, with taxes and insurance, property insurance, all in before utilities, we're at like 1750.
Okay.
So we probably would be profitable if we decide
Yeah.
to rent out.
So it sounds like the cash flow is close to break even, right? But
Right.
really the benefit is the mortgage pay down and equity accrual, right? And
Mhm.
then also the appreciation.
Appreciation and the tax benefits. You get to write off mortgage interest on your taxes.
Okay.
So
Yeah. Yeah. So do you, in your opinion, do you think paying 20% is better? Okay. Can you write off private mortgage insurance
I don't
or
know.
no?
That's a good question.
And if you can, do you
But
think it's
I
worth
think you
it?
might be able to put 20% down.
Yeah, I guess my question is like, if you can write off the interest, you might as well put as little down as possible, right? Or is there a trade off there?
I mean, the trade-off is the bank, if you don't put 20% down, the bank is going to make you insure the loan for their interest, um, that they don't lose money. So you have to pay $150 a month to the bank just for not having 20% down, which,
Okay.
you know, there's different strategies there. You could get an FHA loan, go 3.5% down, just get in a property for no money, and it might make sense. But I think if you can, it'd be wise to put the 20% down, and then if you're doing commercial real estate or it's a rental, the numbers work out a lot better. if you're doing a commercial loan, you almost need to put 20-30% down on the property anyways. You can only put less than 5% down if you're getting residential.
Right.
So, I mean, that's the only way I got away. You could get away with that. As a rental, if you're not living there, you probably do have to put 20% down anyways.
Okay. Yeah. Yeah, I think if it's an investment property, you have to put down 20% unless you live in it for a year or something.
Mm-hmm.
There are tax loopholes. It gets crazy.
Just build out a spreadsheet, know your numbers, meet with a mortgage broker, know what your costs are going to be, and
Yeah.
then know what your income would potentially be, and just have your numbers right.
Well, thanks for sharing some of the details. I know it's like the four things you don't talk about in a bar. Religion, money.
Religion, what is public data? If you really wanted to find out the purchase price of
Yeah.
my home, I guess you would need the address. So maybe it's not too public, but so kind of where are you at right now? What's your strategy? Are you just saving bank right now? Just investing, buying up equities, or kind of what's your where you
Yeah.
at?
So my primary wealth acceleration vehicle is the stock market and content content distribution systems, right?
Yeah,
So
yeah.
we make the podcast, we put it out to YouTube, we get paid a certain certain dollar amount per thousand. For the financial space, I've been averaging about $15 per thousand views, which is incredibly high. I know I did a watch YouTube channel talking about like luxury watches or semi-luxury watches. The CPM on that was like $1, $2.
Per thousand views.
Yeah. So I would need
Whoa.
15,000 views on a
So
video.
content matters, what you're talking about, because they can sell you a
Yeah.
credit card if you're talking about finance
Yeah,
or a
exactly.
loan, where if you're talking about watches, that I mean, you can pretty much sell a watch or clothing or whatever, which there's not much profit in.
Yeah, and actually it makes sense like in terms of all businesses. Usually if you follow where the money is already flowing, you can make more money. So luxury watches is kind of surprising because they cost a lot of money, but if you think about it, people don't buy those every day, you know. Whereas with financial things, people use their credit cards every single day. Your credit card company's taking a commission on that. So there's a lot of money, like trillions of dollars flowing every day.
So
So,
let's do the math here. If you $15 per thousand views, so if you get a
yeah.
million views, how much money do you have?
Well, a million is 1,000,000.
So $1,500.
No, 15,000.
15,000 for a million.
Yeah.
Holy crap.
Brian's over here like, why is he spending all this time doing these stupid videos? And I'm over here like,
I've got to say though, having a passive income stream of however many $100 per month, I'm investing however much in bonds just to get $100 a month, where you're just making some videos and
right.
making the same money.
Right. Well, so that's the crazy thing. So in all of my investments, so I have the public investments that I share on the YouTube channel, the stock picking account, which has about $1,400 right now, and the baseline account. The baseline account just does like index funds. So I'm trying to beat that account. It has about $1,200 right now. So I have those accounts. Those are public. I share with everybody how much money I have in those accounts.
Mm-hmm.
But even in like all of my investments together, the YouTube channel makes more money per day than the anticipated interest on those accounts.
Well, also though,
So,
you're talking about $1,500. How much is $1,500 going to generate? You need to
well,
put
I
more
mean,
in there. But even yeah, I hear
no,
what you're
I'm
saying
not
though.
saying just the public accounts. I'm saying
Oh, and your
all
private
of my
income.
accounts. The
Wow.
public accounts are a fraction of everything.
Yeah.
So
Wow.
I'm more
That's what it
cautious.
says. That's why you have to get your primary income up before worrying about investing. Invest in yourself is what a lot of people say.
Yeah. Yeah, and I mean, if you think about it, like my time is limited, obviously. Everybody's is, and the amount of hours in a day that I get to trade for my salary, well, actually, the number of years that I can trade for my salary has a finite number, you know, 20, 30, 40, however long you work. So there's, if you save like 10% or 20% of your money, you can guesstimate about how much money you're going to have at the end of it. Whereas with something like YouTube, the amount of time it takes and the amount of energy it takes to create a piece of content that is reproducible for free is the same, whether it reaches one person or a million people.
And I mean, it keeps gaining views after you post it. So the more you keep posting, your old videos grow and your new videos grow. So just kind of exponentially grows there.
Yeah, yeah, it's not perfect. YouTube is super competitive. It didn't used to be. Like I've been on YouTube for a long time. um, yeah, with the watch channel, I would say growth was probably like 2 to 4 times easier than
So
with
what
the
what were you
investment
maxing
channel.
out on your watch channel? Like what was
Oh,
your income there versus your income on this channel?
well, so the CPM is different, remember?
Yeah.
So the income there, well, it's a little bit fuzzy because I opened up a store and I sold products. I don't do
Mm.
that on the investment channel, not yet.
Yeah.
But the day that I opened the store for my watch channel, I made like $300 or $500.
A month.
No, that day.
Oh, the day.
That day, yeah.
So why what? In profit or gross
My
or
margin was about 60 to 70%. Yeah.
and so
It
why
was
did you
stupid.
stop?
It
And
was
so why did you
stupid.
s- so so
Uh,
what happened?
well, I thought about things long term, basically. And actually, I was given the option to drop out of college with very limited risk and pursue it full time. But I thought about like the maximum potential for both opportunities, and I found that I didn't really want to be like the watch guy. Like
Yeah.
I didn't, if you think of like a chef, you probably think of like Gordon Ramsay.
Mhm.
So I didn't want to be like the personality you thought of, or the second personality, or the third personality you thought of when it came to watches. And I do really enjoy engineering and programming. So yeah, I guess long story short, I thought about things long term and I was like, okay, what do I want to be remembered for? How do I want to make an impact? And I realized that like I could make a living doing this watch thing, but I wouldn't have any time to do
But
anything
you could have
else.
kept it. Is it still up or did you remove it? Do you still have your web store up?
The store is no longer up. Um, yeah, the store is no longer up. Probably have missed out on, I don't know, a few $1,000s in sales.
Yeah. Okay. I
Um,
hear you though.
the channel is still up. I still make money on it. It's like $60 a month. It's nothing crazy, but it's something.
That's that's not bad though. Like
I know it's
still pretty
something.
good for having it just already there and still coming in.
Yeah, it's tough. The work that I'm doing now, um, the financial upside is definitely not, you know, $500 a day in profit. Um, but I think my impact is larger. So
Mm.
I get to,
And, and
this
and and
project.
so you don't want to go into YouTube as programming or teaching programming or what your actual profession is. Have you
No.
thought of that, or that's just
Yeah. Yeah, I have thought about that. I think the simple answer is, I spend 8 hours a day doing engineering stuff,
mm,
and I need a break, honestly. I've always
yeah,
been interested in finances too. So it's kind of like a second passion of mine. I was kind of debating between going to school for engineering or going to school for business, but I realized that, like, most products, or a lot of products, are made through, programming, and a lot of tech products are, at least. So I wanted to learn how to build things rather than manage businesses.
mhm.
But now, like, I have the skills to build things, so it's an opportunity to learn.
And yeah, kind of document your growth in this space,
Yeah,
which I yeah is pretty cool. Um,
yeah,
Throughout.
and build the content systems. I am not 100% against the idea of building a software system. So what I mean by that is, like, okay, I spend all this time listening to calls, listening to earnings calls, reading financial statements from companies, but getting all that information is kind of hard and it's time consuming. So I may be able to automate some of that process and build some sort of product, like a website that people pay a membership to, or something like that. Maybe
That
as
will
an
tell you
independent
what to
brand.
invest in based on their earnings per share, or
Yeah,
you
maybe
know,
not go as far as financial advice, but go as far as providing information in a concise and packaged manner that people are
uh-huh,
willing to pay for.
yeah,
So, yeah, I'm not 100% sure on that. Like, if people have ideas about, like, pain points in researching companies and picking stocks, other than it just takes a lot of time, I'd be open to hearing about them and trying to create a product.
so you don't want to create your own funds. You don't want to create an investment funds, manage it for people, be a
No.
financial. You just want to kind of build knowledge around it. See, I would really like to build my own fund, backed by real estate, where I can have people invest in properties and pay them out a monthly dividend based on the income of the property, which a lot of people do. It's called real estate syndication. Um,
Right. Like a Grant Cardone.
yeah, like exactly like a smaller Grant Cardone,
Smaller Grant Cardone. Yeah.
because he has what
30
you know,
million, I think, was his last funding round or something.
yeah, geez. But
Yeah.
yeah, I mean, it can scale there. You get one property with 4 units, and then you get a 16 unit property, and then from there you just use the income from the previous properties to get more properties, um, and so it's kind of a long term play. But I think even holding a couple properties, um, over time could be enough to achieve financial independence.
Oh, yeah, definitely.
Kind of the goal.
So I mean, I'm sure you've heard of Meet Kevin, right?
Yeah,
Yeah.
safe,
So,
safe. Yes.
yeah, okay. So his idea of, like, a wedge deal, right? I mean, you could reach financial independence. I mean, I would say it depends on your number, but you could reach it really quickly if you just buy a whole bunch of wedge deals, right? It's
Sure,
just a
yeah. I mean,
question of finding those
if you
deals.
come into a bunch of undervalued property, the
Right.
day you buy it undervalued, you instantly make that money into what it's appraised for, the next day.
Right.
I mean, a lot of people do that too. It is called wholesaling. They'll get properties under contract less than market, and then they'll just flip the contract, bring in someone who wants to flip the house, someone who wants to live in the house, and they'll make the difference from what they got under contract for to, what they're going to sell for, instantly make, you know, 30, 40 grand, whatever it is.
Right. I guess what I was saying is like you do that, and because the magnitude is so large, if you do that enough times, you're going to reach your number pretty quickly. I mean, for
Mhm.
example, let's say you needed $1 million. That would be what, 40,000 a year on 4%. You want to be safe, 3%, 30,000 a year. If you're
Wait, I'm not following. You need, say you want $1 million. You're
Yeah, so
saying
you mentioned
you want
financial
to,
independence, right?
yeah, yeah. Oh, okay. So 40,000 is what you need to live.
Well, so let's say you had $1 million and you were able to generate a 4% return.
Uh,
They've done studies on this, but so for example, they say like if you have a certain amount of money in the bank and you withdraw, or sorry, invested in stocks, and you withdraw 4%, the chances of you running out of money in 30 years is like only 5% or something. It's called the Trinity study.
mhm.
Um, but so what I was using that 4% number as like a safe retirement or financial independence number. But even if you're doing something like conservative, like 3%, um, let's say you generate a return on your investments and you withdraw 3% of your portfolio balance every year. Let's say you had $1 million in stock, that would be $30,000 a year that you're withdrawing.
So wouldn't you just be capping your growth then if you did that? If you're taking out 30 grand a year from your million, you're just staying
Yes.
level, maybe slightly going up.
Yes.
But I guess it doesn't matter because in the end, you just want to spend it until the end of your life, and then in which point you could have zero.
Right. So yeah, this is like traditional retirement advice, not necessarily like financial independence as in you're working on side projects and doing deals and finding more ways to make money. It's more
Right.
so a if you just retired, you said I'm done, I don't want to work anymore. Um,
How much you
my
need
so
there to get there. Yeah.
yeah, yeah. So my point is like, okay, if you can live on $30,000 a year, well, that would be $1 million in stock. So that would be your goal, right? So to get there, let's say you did the whole wedge deal with properties, 30,000 each one, give or take. These are rough
Yeah.
numbers. That would only be what, like 30 deals? You'd be there.
Yeah. Yeah, a
So
little bit more than 30 deals. But I'm saying, you wouldn't even have to go that far because you'd buy the first few deals. You'd make that, you'd make the initial amount on the wedge, but then you're going to rent it out. So then you're going to have rental income. And then that same property that you already have 30 grand banked, now that property is going to generate $300 a month. So you have that additional income. Plus it's appreciating. So by the time you even get to thinking about retiring, you're going to have even more equity in that deal. But yeah,
yeah,
buying
it
anything under
compounds.
market it's a good idea. If you could buy it for less than what's worth and sell it for more, that's the name of the game there.
That's the dream.
Yeah, all these YouTubers giving advice. They're like, here's how I made enough to retire, and the whole thing is predicated that you know they make money because they make YouTube videos, which is
Right.
how and which fair enough. Like if that's what you're doing, but for a lot of people watching, you know, we just don't have the revenue stream from having millions of YouTube views.
Well, it's funny you bring that up because I mean that's basically what I'm doing. Um, I mean, my primary source of income is not YouTube for sure.
It's the age old saying, um, you know, watch someone and follow what they do and not what they say.
Right.
You
Well, so
know,
that's what I was gonna say. All these you were saying like every single one of these guys, it's a paradox of practice, right? So a lot of them, we don't have to name names because I don't want to make enemies, but a lot of them, they'll say like, you know, max out your 401 or max out your IRA and 401k, and then it's also like right next to a video that's like how I got $6 million by 29 or how I made $10 million by 28. It wasn't by maxing out your Roth IRA or 401k. I can tell you
yeah,
that. That's numbers don't add up there. So, as you were saying, you have to, tomorrow's video is going to talk about this more. You have to look at what these people do. And from my perspective, I would like to be, the stock talk is great, but I'd like to transition more toward talking about business, talking about entrepreneurship. How can you increase your income, right? Because that's really how you're going to be able to build wealth, right? You can trade your time for a salary or for hourly, and you can do it the slow way or you can do it the fast way, right? So, yeah, I mean, a content system is definitely one of those things. A software system is another.
yeah, sell software. You could repetitively sell it.
A
Um,
rental system like real estate, or even like the software information product that I was describing earlier. If if I'm selling information, I'm like renting information, right? Or renting access to the site that has
or
information.
yeah, you could do a subscription fee there, which I mean, you see every company going to nowadays. They're just charging subscriptions for
Yeah.
their products instead of charging a flat out fee. Um, it's clearly more profitable, but not good if you're trying to save and all of a sudden, you know, you have hundreds of dollars in subscription fees.
All right. So how should we wrap it up? Buy stocks, bro.
Put some plugs in there. Josh Invest, YouTube,
Yeah.
follow, subscribe, hit that like button down below if you want to see another podcast. If you like this content format, let us know.
Sweet. I'm keeping it in. That's going to be the outro.